The 5-year October pattern. Let's start with something undeniable. October has been the recovery month for altcoins 5 years running. Not speculation, not hopium. Documented price action that repeats annually with, honestly, kind of eerie consistency. Here's how it works. September arrives and the market bleeds. Confidence evaporates. Twitter fills with bull market canceled posts. Retail capitulates. Weak hands sell at losses. Every September feels like the beginning of a prolonged downturn that'll last months. Then October hits and everything reverses. Prices surge. Momentum returns. The same people panicking in September are suddenly chasing pumps in October. This pattern has held through different market conditions, different macro environments, different narratives. Yet it keeps working. Altcoin Doctor, an analyst who's tracked this phenomenon for years, emphasizes that this isn't coincidence. There are structural reasons why September bleeds and October pumps. Tax loss harvesting strategies wrap up by September 30th for many institutional players. Quarter 4 begins, and with it comes renewed capital allocation. Hedge funds rebalance portfolios. Retail FOMO kicks in as they see charts turning green again. VeChain specifically has participated in every single one of these October rallies. Sometimes the gains were modest, 15 to 25%. Other times they were explosive, doubling or more. The key observation is that VET consistently outperforms during these October recovery periods, suggesting it captures disproportionate attention when altcoin season returns. This year, early signals suggest the pattern is repeating again. VET already climbed 6% as October began. That initial pop, it really mirrors what happened in previous Octobers before larger moves developed. The question isn't whether October historically pumps altcoins, that's established. The real question is whether current conditions support another round, and whether VET specifically is positioned to capitalize. Looking at where we are right now, sentiment mirrors previous Septembers. The fear is palpable. Charts look broken. Yet beneath the surface, accumulation is happening. Addresses holding VET long-term continue growing. On-chain activity remains stable despite price weakness. These are the conditions that preceded every October rally in VeChain's history. The pattern is simple but powerful. September shakes out weak hands. October rewards those who held through the pain. We're now entering the reward phase. Whether you participate depends on whether you learned from the previous 5 cycles or ignored them. Quick pause. If this October pattern analysis is clicking for you, hit that like button right now. It pushes this video to traders who need to see this setup before they miss the move. And if you're not subscribed to TJ Crypto World, subscribe and turn on notifications. We track seasonal patterns and macro shifts that determine when markets actually move, not when Twitter thinks they should. Don't miss what's coming next in this breakdown. Now let's get specific about VeChain's chart structure and why the technical setup supports a major move. VET currently trades around 2.3 cents with a market cap sitting near $1.98 billion. That ranks it 55th among all crypto assets, which means it's established enough to attract capital, but small enough to deliver substantial percentage gains when momentum arrives. That's the sweet spot for altcoin rallies. Not a micro-cap gamble, but not a giant requiring billions to move meaningfully. The critical technical level everyone should be watching is the 0.136 Fibonacci retracement. This level has acted as a magnet during previous VeChain rallies. Every major upward move since 2020 has either tested this Fibonacci level or blown through it during peak momentum. It's not arbitrary. It represents a mathematically significant retracement from VET's all-time high, and traders consistently use it as a target. From current prices around 2.3 cents reaching the 0.136. Fibonacci level means VET needs to hit approximately 4 cents. That's a 115% move. Essentially a double. Before you dismiss that as unrealistic, remember that VeChain has delivered similar or even larger moves during previous October rallies. The 2020 October pump took VET up over 100%. The 2021 October rally was even stronger. The pattern repeats because the market structure supports these moves when conditions align. Altcoin Doctor emphasizes that while such moves can unfold over weeks, October's historical performance shows that initial momentum often builds quickly. The first week or two establishes direction, and if buying pressure confirms, the bulk of the move happens mid to late month. That means we're currently in the positioning window, before the crowd recognizes the rally is underway. The chart structure itself shows VET consolidating after a prolonged downtrend. This consolidation formed a base, and bases are where significant moves begin. The September low established support, and the October bounce confirmed buyers are defending that level. If history repeats, the next phase is a sustained move higher that targets the Fibonacci level. Volume patterns support this thesis. Selling volume dried up in late September, which typically signals exhaustion of downward pressure. October's opening days showed increasing buying volume, confirming demand is returning. When volume confirms price direction, moves tend to be more reliable and sustainable. There's also the psychological component. VeChain has been quiet relative to other altcoins during recent rallies. It's not the coin everyone's talking about. That's actually bullish. Coins that remain under the radar during early accumulation phases often deliver the strongest moves when attention finally shifts. VET is positioned as a forgotten altcoin that could surprise when October's broader rally lifts all boats. The key resistance to watch is 3 cents. If VET breaks and holds above that level, the path to 4 cents opens up quickly. Resistance turns into support, and momentum traders pile in. That's when the 115% move from current levels becomes not just possible, but probable. Technical setups matter, but they work best when macro conditions align. Right now, the macro picture for altcoins is as bullish as it's been in months. Start with USDT dominance. This metric measures how much of the total crypto market cap sits in Tether stablecoin versus actual crypto assets. When USDT dominance rises, it means money is fleeing risk. People are selling crypto and parking in stables. When USDT dominance falls, it means money is rotating from stables back into crypto assets. Guess what's happening right now? USDT dominance is trending downward. That's significant because declining USDT dominance historically precedes altcoin rallies. The capital sitting in stablecoins needs somewhere to go. Bitcoin absorbs some, but altcoins capture disproportionate inflows during these rotation periods. VeChain, as an established layer 1 with real enterprise adoption, becomes an attractive target for that rotating capital. Bitcoin dominance is another critical metric. When BTC dominance rises, Bitcoin outperforms altcoins. Capital flows into the safest crypto asset. When BTC dominance falls, Bitcoin underperforms and altcoins surge. We're seeing the early signs of Bitcoin dominance topping out and beginning to decline. That's the signal altcoin season could be starting. The total crypto market cap provides additional context. The market recently retested $3.6 trillion and held. That's a significant support level established during previous rallies. Analysts tracking macro trends project the next major target at $5.6 trillion for this bull cycle. A move from $3.6 trillion to $5.6 trillion represents roughly 55% growth for the entire market. But here's where it gets interesting for altcoins specifically. The altcoin market cap, total crypto minus Bitcoin and Ethereum, currently sits at $1.61 trillion. The projected target for this cycle is $2.44 trillion. That's a 51% increase in altcoin market cap. If VeChain captures even a proportional share of that growth, it moves substantially. And if VET outperforms, which it historically does during October, the gains become exponential. These aren't random predictions. These are targets based on previous cycle peaks, Fibonacci extensions, and historical market cap ratios. When the entire altcoin sector expands by 50%, individual altcoins often move multiples of that, depending on positioning, narrative strength, and technical setup. VeChain checks all those boxes. October's seasonal pattern combined with declining USDT dominance, cooling Bitcoin dominance, and expanding altcoin market cap creates the perfect environment for VET to rally. The conditions are stronger than previous Octobers because the macro backdrop is more clearly bullish across multiple indicators simultaneously. If this VeChain analysis is making you rethink your October strategy, smash that like button right now. Share this video with anyone asking about altcoin opportunities. And subscribe to TJ Crypto World if you want to catch these setups before they play out, not after everyone's already bought. We're tracking the seasonal patterns and macro shifts that actually move markets. Hit that notification bell so you don't miss the follow-up when we analyze whether VET hit these targets. So where does this leave VeChain heading into the rest of October? The setup is clear. 5 consecutive years of September-October reversals. Technical structure pointing toward the 0.136 Fibonacci level at 4 cents. Macro conditions showing USDT dominance declining, Bitcoin dominance cooling, and altcoin market cap targeting $2.44 trillion. Does that guarantee VET doubles this month? Nothing's guaranteed in crypto, but the probability is higher than most traders realize. The pattern has worked 5 years straight. The technical levels are clearly defined. The macro backdrop is more supportive than previous Octobers. And VeChain specifically has a history of outperforming during these seasonal rallies. The 115% move from 2.3 cents to 4 cents isn't speculation pulled from thin air. It's a Fibonacci-based target that's been relevant for every VET rally since 2020. Whether that move happens in 2 weeks or throughout October doesn't change the destination, only the speed of arrival. For those positioned, the next 2 weeks will determine whether this plays out like previous Octobers. For those still watching, the window to position before the crowd recognizes the move is closing. October doesn't wait for skeptics to become believers. It rewards those who recognized the pattern and acted while others were still paralyzed by September's fear. Thanks for watching TJ Crypto World. If you want to see how we're tracking other altcoins with similar October setups, check out our video on hidden seasonal patterns in crypto. It's linked on your screen right now. I'll see you in the next one. Stay sharp, stay informed, and never let recency bias blind you to repeating patterns.